Since 2008, aggressive fiscal stimulus, ultra-low interest rates, and round after round of quantitative easing have kept the U.S. economy expanding and created astonishing amounts of wealth. Now, because of the spike in inflation to 8.6%, further fiscal stimulus is off the table. And the Fed is aggressively hiking interest rates and destroying large amounts of money through quantitative tightening. This 180-degree policy reversal is very likely to throw the U.S. economy into recession and result in a tremendous amount of wealth destruction. Americans should prepare for a very hard landing. Between 2009 and the end of last year, very low interest rates and quantitative easing caused household wealth to soar by $90 trillion, or 150%, from $60 trillion to $150 trillion. So this is household sector net worth. This chart shows the wealth to income ratio. It's calculated by taking household sector net worth, which we just saw, and dividing it by disposable personal income. The average for this ratio since 1952 has been 552%. When this ratio is above its long-term average, it indicates that asset prices are stretched and at risk of correcting. During the NASDAQ bubble, the wealth to income ratio rose to a new record high of 615% in the first quarter of 2000. When that bubble popped, wealth was destroyed and the ratio fell back to its average of 550%. During the property bubble, this ratio set a new record high again at 670% in the first quarter of 2007. When that bubble popped, a lot of wealth was destroyed, and the ratio fell back to its average of 550%. At the end of the most recent quarter, the wealth to income ratio was 818%. This is 22% above its previous peak during the property bubble. Here's what that ratio would look like if it falls back to its average of 550% over the next year. If the wealth to income ratio were to fall back to its average of 550% over the next year, $50 trillion of wealth would be destroyed between the end of 2021 and the first quarter of 2023. I estimate that more than $15 trillion has been destroyed so far this year due to the stock market sell-off. This is as of June 24th. So the peak in household sector wealth was at the end of last year at $150 trillion. I estimate it's now $134 trillion. If the wealth to income ratio were to drop back to its long-term average, then this would fall to $100 trillion, representing a destruction of $50 trillion of wealth.